Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Thursday, October 13th, 2011. Let's get right into the charts here. A lot of action has happened. I do this video a little bit late on Thursdays so that we get to see the initial weekly jobless claims. But since the jobless claims have come out, the market is sold off and then rallied right back up. Only down 4.5 points now on the session, so not really a big deal for the markets. Down just 4.5 points. They've had a tremendous rally since October 4th, and looks to be just down slightly today. Really not much at all. A couple of things to go over. JP Morgan came out with earnings this morning. Pretty important. Let's take a look at JPM. JPM came out with earnings. The number beat on the top line, but really when you see how they got to that earnings number with the accounting measures that they use, really it was a pretty disappointing earnings report. So in any case, if JP Morgan starts to sell off a little bit more, and right now it's really not all that bad. The stock yesterday closed at 33.20. Today it's trading at 32.65. We'll have to see how it plays out. But if the stock does decline, watch stocks like Morgan Stanley. That was under a little bit of pressure this morning. Watch Goldman Sachs, also under a little bit of pressure. I saw Deutsche Bank earlier was down a little bit. So all the financials could come under a little bit of pressure. But again, we'll have to just see how this plays out. Maybe if the U.S. dollar index declines enough, the banks will probably even catch a bid, as the market has really completely caught a bid off of the dollar. As the dollar declines, the markets have been moving higher. So really, in my opinion, there's some economic news out of Europe and also some news out of China last night. China did catch a move higher again last night. Chinese market was up about 0.8%. The Shanghai index, that is, that leads our market. But the People's Bank of China has openly come out and saying that they are pegging their currency to the dollar, and they're actually lowering the peg. So that's causing Chinese markets to inflate a little bit. Everything out there is a currency manipulation trade right now. It's all about figuring out who is going to weaken their currency to get their stock markets up. And they're all doing it at the same time right now, and we're getting a big boost. U.S. dollar index has really declined sharply, and I think that's really the most important at the moment. And you can see here the dollar today is really just holding steady. But look at it on a daily chart here, and you'll see over the past week, look at how sharply the dollar has declined. And of course, all you have to do is look at the futures, and you'll see how quickly the futures have rebounded. So it's a one-for-one trade. Dollar down, market up. That's the most important factor out there at the moment. However, all the currencies out there, whether it's the Chinese yuan or anything else, if they can get their currency down, that ultimately usually helps out their stock markets, or at least helps them to inflate. So that's what we're looking at really across the board. So again, you could take a look at oil today. Oil is down slightly, but it is getting a little bit of a pop as the dollar declines a little bit. So USO now trading at 32.68 a share. Yesterday closed at 32.92. Not a big deal. Spot crude is down about 90 cents at the moment. Let's take a look at GLD. Here's gold real quick. Gold is trading at 162.18. GLD closed at 163.26. So gold is down a little bit. SLV also trading at 31.26. That's silver. Closed at 31.77 yesterday. Again, nothing sensational here by any stretch. But again, coming under just slight pressure. Really not all that much. A couple things to go over first. I did see some stocks in motion besides the financials. One was Vertex. Very, very good move for Vertex. This stock looks like it put in a little bit of a bottoming tail a couple days ago, and today you're getting a nice pop in Vertex, trading up to the 44 level, now pulling back to 43. It has a chance to move up a little bit. 44 will be some short-term resistance, then around 45, a little bit more resistance. So watch the pattern in on that chart. Let's take a look. I did see the Chinese ADRs, which I'm following closely. Sina, which closed at 78.48, trading a little bit lower this morning at 77.90. We'll take a look at BIDU as well. These are very, very important because they not only are good trading stocks, but they're also stock market indicators of where this market may be headed. Sina is trading at 130.20. Yesterday it closed at, BIDU trading at $130.20. Yesterday it closed at $130.83. So not a big deal there, just down slightly in the morning. Not really all that much to go over. A couple things that you want to know about today. Watch the dollar chart. Okay, watch the dollar. If the dollar is going lower, That means the euro is probably climbing. This morning the dollar is higher by about 28 cents, and you see the FXE trading down lower. So again, it's really all about the dollar. It's all about currencies really across the board. But the dollar and the euro will trade opposite each other. The euro will trade with our stock market as well. Dollar goes down, stock market and the euro will both go higher. So that's what you need to know. Forget all the noise coming out of Europe. We're going to hear this stuff for a long, long time to come. If this European stability facility uh, is going to work out, I just have no idea. Really, Greece is broke. That's the bottom line. The sooner the world recognizes that and admits it, the better off we all are. But we'll have to wait and see how this all unfolds. Kicking the can down the road, I guess, has worked to some degree, and that's what they're looking to do here. Just postpone the inevitable. But after Greece, there'll be another country. And after that country, there'll be another country, and after that country, there'll be another country. So the list goes on and on. It's not only Greece, Portugal, Ireland, Belgium, but Spain, Italy, and France are in big, big trouble. And Germany, quite frankly, is not even in that great a shape. I know everybody talks about it like it's a savior, but look at their GDP. To debt, it's about 80%. So really not all that great. But in any case, we'll just watch the dollar. As long as the dollar goes down, the markets will trade up. That's the bottom line. Okay, everybody. Those of you in the chat room, we'll see you on the microphone at 9:30. Those of you out there trading, good luck today and stay safe in this environment. And we will see you all tomorrow morning. Have a great day now.